Hello, everybody. Welcome to Thursday. The S&P 500 was down a little bit more than 1.8% today. Interestingly enough, it actually started off up for the day. We had an unemployment report that came out for first-time unemployment claims that was higher than expected. Usually that's bad, but in a high inflationary environment, that's perceived as good. And so the market's moving along. And then all of a sudden, we had some trouble with one of the regional banks, bad loan losses and those types of things. And they're kind of teetering on the edge of, insolvency. And the market responded very poorly to that. The banking, segment got hit pretty hard, especially the regional banking segment, and that kind of brought down the rest of the market. We also saw several of the different big indexes fall below the 200-day moving average. And again, there's a lot of big programs out there that use that average to kind of buy or sell depending on whether it's going up or down. So when it's coming through that, you'll get some more selling that happens. The S&P 500, it came right down to the 200-day moving average, so it's sitting right on it right now. So might fall through. Tomorrow is very important. We have the big jobs report. So we've been in a green light scenario here just, for the short period of time. It's worked out actually okay compared to the market as far as that goes. But what we've done here now is we're in a yellow light scenario. Based on our triggers, very, very close to a red light scenario, which will probably trigger tomorrow. So in a yellow light scenario, we move into more defensive stocks and utilities and high dividend paying stocks. In a red light scenario, actually move into more T-bills. So this is very likely to happen tomorrow on our, retirement type accounts where we don't have tax consequences. We're not yet into a red light scenario on our taxable accounts. We give those more room because we don't want to create a lot of taxable gains and things that have to end up on the tax returns. But if the market continues to have problems, we definitely want to preserve principal. We're at a point in the market where we're kind of on the edge of this cliff, and it's the risk is higher. Doesn't mean we'll fall off the cliff, but there's a lot of concern about what the Federal Reserve is going to do here. We're seeing, some better job report that came out yesterday from the ADP. Maybe the one tomorrow is better. CPI reports coming out on Tuesday. So those are the data points that everybody's going to be focusing on before this Federal Reserve meeting. So, and the worry is that they're going to raise the rates a half a point. And again, if a bank is already having problems right now and they continue to raise rates, that's where things can start to have problems. And so that's what people are worried about with this rate increases. The Fed has to get inflation down, but as stock market investors, we like to see the economy do well. So that's where the conflict lies as far as that goes. So that's why the market's selling off. And unfortunately, once it gets rolling, it can go pretty far. So we want to make sure to preserve principle here and wait and see what's going to happen. So we're going to be working on that tomorrow morning. So look forward to talking to you tomorrow. I do my show tomorrow, summary about the market for the week. I think this would be a great time to join. It's live from 12:45 to 1, from 12:15 to 1 on Fridays on YouTube. So look forward to seeing you then. Thank you very much.